All right. Good morning, everybody. Happy Thursday. Thursday the 29th, 6:30 a.m. Central Standard Time. Gonna get my goodies pulled up over here real quick. Let's see here. I just want to move a couple things around real quick over here, and then I'll get rolling. We'll dig in and see what kind of setups we might have for the day. Surprise index. There we go. There we go. That's what I want. All right. So let's get my screen shared. And we're going to jump in real time, see what we got. Stepped out of my shower earlier and about froze. And I always have my fan on in my bedroom. And like no matter what season it is, it could be ice cold outside, but I got to have my fan going. It's just helps when I sleep. But anyway, I stepped out and I had that on, and my exhaust fan in my bathroom. I don't like having it on when I'm showering because it just blows straight air right at me. It's like pointed right above my shower. So when I step out, I freeze. So I usually shut it off, but forgot to shut it off today. So I froze there for about a minute. All right, let's see here. What have we got? All right, so today being Thursday, here in about an hour, we do have our weekly unemployment claims number coming out for the states here. And it is, again, like I mentioned yesterday, it's 4,000 short, okay? They are projecting 4,000 less claims, which is obviously good. Anytime you can have a number smaller than the previous number, it's always a good thing. So we'll see what that number comes out to be. That's a pretty neutral number. I mean, if it comes out at 223,000, I wouldn't expect the dollar to move much. But obviously, it just depends if it beats it or misses the forecast, right? So that remains to be seen. And then other than that, looks like Reserve Bank of New Zealand Governor Bremen is going to flap his lips again today, 5 o'clock my time, 5 o'clock Central Standard Time, PM, post-meridium, okay? So that's all we have as far as high impact events. Let me see if we have any other like orange folder events popping up here. Philly Fed Manufacturing Index at 7:30 as well. And then the pending home sales numbers coming out a little bit later for the dollar. Now, yesterday we had some pretty decent numbers. They're light impact events, but if I turn on my yellow folders, we did have a couple decent numbers yesterday that all added up to be a pretty good day for the dollar. So looking right here at the 7:30 section, we had the durable goods numbers coming out, building permits, and housing starts. So again, guys, these are more light, low impact events. But when you stack these together like this, where you had 4 good releases that all 4 exceeded expectations, that's still a pretty good boost to the dollar. It may not be one big red folder event, but when you stack a handful of these, 2, 3, 4 of these lighter impact events together, that's a good thing. So that can almost act as one red folder event, if that makes sense. So just something to keep in mind. Obviously, the world goes around on these high impact red folder events, but just always keep in mind, it is good to turn on your medium impact and your light impact, at least once a day, just to see where we stand on that. I mean, there's a huge difference between four beats on light impact versus 4 misses, right? So I don't think a lot of people really mention that. A lot of people stick to, hey, what's our high impact red folder event for the day? But this is just something to keep in mind, okay? Because sometimes those in itself can give a boost, especially when you stack them together like we had yesterday. Okay, so that was yesterday. Pretty good day for the dollar from that aspect. And then once again, just going down here to Thursday, incorporating the orange folder and yellow folder. Just wanted to see what else we had on here. Okay, trade balance for the dollar. Pending crude inventories. Okay, if you're an oil trader, obviously that release is coming up today. The weekly release for that. The previous week on crude inventories, if you remember, was a negative number. Okay, it was a negative number, but last week, rather than that expectation being very small, it actually came out to be 8.5 million barrels. So obviously, that's a lot more supply into the system, and when you introduce a lot more supply into the system, that typically cheapens the asset. Okay, so that was last week, but now this week, we are expected to drop back down closer to where we were expected last week. So obviously, if that were to drop around that 1.7 or even a little bit lower, then that's good for oil. That's good for the price of oil. It would go up. Okay, maybe not right at the very moment of the release, but over the course of the day or whatever the case is, you could be seeing that go upwards for oil. Australia has their PMI data. Okay, we've got it as a red folder event for the dollar, right? But just keep in mind, some of these other majors, they're not as high on the totem pole, but they're still important for their individual currency, right? Especially when we're talking about the index, the currency index itself, or surprise index, right? So obviously, the Australia dollar is currently still at the top. It's still leading the pack as far as percentage of high impact events exceeded expectations. So it's at 66. It's at the top. The euro is right behind it at 60. And then skipping the currencies I don't trade, going down to the dollar is in third place at the moment. So no change on the dollar. Again, those were good reports yesterday, but they were not high impact. So that's why they're not calculated in. But just kind of on us as a side note, I still like to look at those, especially when you stack them together, like I said, like we did yesterday. So that is the top three on the bullish side. And then on the bearish side, still pretty much the same picture. The yen is at the bottom, so it's exceeded expectations on the least, followed by the pound and the CAD. That rounds up your bottom three, okay? Your three in the gutter. Let's take a look at the yen over here just to see why it's been doing so poorly. Okay. 4 days ago, we did have the growth number come out, the GDP number, which was their only release in the last 7 calendar days. That's why we have orange font as opposed to the white font. White font just means it's older than 7 days, but if it's orange, it's within 7 days. I believe it's calendar days. I don't think it's 7 business days. I'm pretty sure it's calendar days. So anyway, yeah, that was the last thing we had. Of course, it was a bearish number forecasted for 0.4%. Actual was 0.1. So the previous report, guys, was minus 0.7. But remember, and it was actually higher. But remember, it all has to do with how does the actual number compare to the forecasted number from the economists, not necessarily the previous number. So I know I mentioned this once in a while, but it can trip people up. Most people will see, oh, we went from a negative number to a positive number. That's got to be good for the Kiwi, right? But remember, you just got to remember to always compare it to the forecasted number. Okay. So the economist forecasted it for much higher, but it did not meet that expectation. So that's why it's bearish for the asset, as well as obviously the Nikkei. Okay, talking about the stock market, Japanese stock market. So that's just a quick look at that. You've had good services PMI data, and that was the only item over the major economic events that's exceeded expectations. Everything else has been either neutral or bearish. So currently, that's why the yen is in the bottom. That's why it's in the cellar or the basement, right? And right behind that was the pound and the CAD. So let's take a quick look at that. Okay, we've had quite a few releases over the last 7 days, and 3 of the 4 have been bearish. The other one was neutral. Okay, that was your CPI. So negative PPI, negative unemployment rate. They went from 5.1 to 5.2. So that's never a good thing when your unemployment rate goes in the positive. Yeah, that's just never a good thing. 5% is a little on the elevated side. That's quite a bit on the elevated side for unemployment rate, right? And then you got the neutral reading that we did have, which was the inflation number, the year-over-year inflation number. that remained right at 3%. So the economists got one report right. And then you had the growth number, which was bearish as well, guys. So the growth number didn't even change, right? It remained the same, 0.1%. But the economists predicted to double it up, or not to double it up, but to increase it, double the number, right? But it failed to do so. So UK, second worst currency pair, or currency, I should say. And then the Canada dollar, which is the third worst. They've had one report lately. That was the inflation number back on Tuesday. Okay. Forecasted 2.4, actual 2.3. So that's only 0.1% less. But remember, that's good for their pocketbooks. That's good for their stock market. That's bearish for the currency. Remember, these always have that inverse type relationship, talking about the CPI and the PPI. Okay, the inflation numbers. Typically, what's good for the currency is bad for the stock market. What's bad for the currency is good for the stock market. So it's just kind of that weird inverse relationship. So no matter what, when that report comes out, there's going to be somebody not happy. And there'll be somebody that's happy. Okay, if it's not just a neutral reading. So that's a look at your bottom three, and then just to take a look at the top ones. Okay, the top performing ones. Aussie dollar, again, alone at the top. One release in the last 7 days, that was the unemployment rate, where they did drop 0.1%. So much better than the pound. Remember, the pound was up at the 5.2 area. This is at least a percentage point less, but still elevated. Okay, it's still pretty elevated. So they're at 4.1. And the only things that they've had lately missing expectations have been the growth, which is obviously a big report all by itself, the GDP report, and the manufacturing sector of the Purchasing Managers Index. But the good thing with that is, the good thing with the MPMI is it's at least still in a pretty healthy expansionary type territory, okay? So missed it by 0.1. It's not like they missed it by a full half a point or a full point, right? But it is still bearish, nevertheless. So that's Australia. The euro being number 2 currency. One release in the last 7 days. That was the growth number for them as well. They did meet that as forecast, 0.3%. And then again, the dollar being the third best. Still pretty neutral. I mean, 58 is obviously better than 42, right? If you took the 8 points on the other side of the baseline, which is 50. But the last 7 days, we've had a bearish inflation report. So I'm happy for my pocketbook and the gas that I put in my car and the food and all that. But when it comes to the currency, that was obviously a bearish reading. Okay, 1.1% less on the inflation. And then you got your jobless claims. Again, that was last week, which is every week, where that was the bearish number. So the same thing remains today. I mean, for that, it's expected to drop again. Talking about the unemployment claims from 227, last week's 227 to this week's potential 223. So that is a quick look at the strength of these currencies. Okay, and as always, simple game plan is to take the strongest, match it up with the weakest. So in this case, in this example, you got Aussie yen, right? Now it's not always even though, remember, this is just a fundamental analysis. It's 1/3 of the analysis groups. Okay, because you still got sentiment and you still got technical analysis. We showed all the boxes on here the other day. Remember, there were 16 boxes. I believe it was 16. Let me count them. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. I'm sorry, 14 boxes. 14 boxes for the fundamental. Okay. And then 2 and 2 for sentiment and technical. So just a simple math equation says how important fundamental is. But if you have really strong fundamentals, sometimes you can have really crappy sentiment or technical readings. And that'll be enough to drop you below 5, right? So that happens from time to time. And as you see on the list, Aussie yen, which is the strongest currency, matched with the weakest currency, it's not even on the list. Well, why is that? I don't know. Let's go turn on our neutrals and take a look at Aussie yen. Okay, here we are right here. So Aussie yen, as far as fundamentals, it did get the weak reading from the PCE. Okay, Japan's PCE figures into that. The weak PMI, but the technicals aren't looking the greatest. Okay, trend on a daily, it's getting a negative point for that. And seasonality, Aussie yen doesn't necessarily perform the greatest for the month of February. Okay, this seasonality box always refreshes and updates each month. Okay, good morning, Jeremy. Let me know if you have any items you'd like me to take a look at, chart setups or fundamental releases, anything. I did a preview over here off screen just to get a little bit of a preview for today. Gold extending sideways, consolidating below the 5,000 psychological level, lacking conviction. Yeah, gold is on our bullish list over here. As you see, a +6. Let's go click on it real quick. Yeah, so there's your daily. So yeah, this is kind of what I mentioned on stream yesterday, and I mentioned this on Trader Nick's stream as well. It's just too much of a cluster, you know what? JPYX going up, daily changed. Let's go take a look at the JEXI first. That's as of yesterday, though. JPYX. Yeah, we do have some new highs over here, don't we? So we had a break of structure here. We had a break of structure here with this price action. We bounce into this here supply, that little supply zone candle. And from that supply zone, it drops us down to the next supply zone, or the next demand zone, which is down here. Which obviously, if I go to a smaller time frame, it'll probably look a little better. Yeah, there you go. Okay, talking about demand all the way at the bottom, the origin of this overall strong move up, which broke structures. So when price came back down to this level, well, number one, it actually bounced into this demand zone right here first, where you got this reaction from this price action, pushed price up. But then the downward momentum continued it down to the origin of the overall strong move. And from there, you can see our VSA, our volume spread analysis candle picks up volume, showing that the institution started, buying into this zone. And then what happened? We pushed price all the way to the next overhead supply / resistance point, and it broke structure. Okay. Now we didn't really. Did we get a close? Let me see here. I just wanted to see if we closed above that line. We did, I guess. We closed right there, but it was on a very light volume candle, so it wasn't very convincing. But it was a close, nevertheless. Okay, on a 4-hour chart, just with very little trading activity in that spot. So yeah, definitely changed to an uptrend, my friend. I agree. Totally agree. Yeah, I'd like to kind of compare that to the JXY when it pops up, when they open that. Yeah, it's going to look obviously different, because I was actually keeping an eye on the JXY, noticing that we had a, excuse me. Well, if I go back to my daily, I was keeping an eye on this supply at one point. We bounce into it, and we get a turnaround. So yeah, it'll be interesting to see how that opens up. This isn't this isn't open yet. The JXY, it'll be open later. Calculate, but so yeah, bullish yen. I mean, are we going to get our intervention? They keep talking about the intervention for the yen, or I call it intervention. The all yen pairs going down. Yeah, we never quite. I mean, we did get up. What did we get up to over here for dollar yen? 159.5. So we didn't quite get to the 160 level, did we? Yeah, I had for a while. I had an alert set up here just under this overhead supply, but we never reached it. We got close. We never quite reached it. Got close and then it dropped. Daily 4 hour. Yeah, let's see here. Is there a yeah. Yeah, no, I agree. They could be going up. I just don't really have a play on it. Just looking at dollar yen. Obviously, it's pretty neutral. Dollar yen itself being, oh my goodness, quit doing that. Dollar yen, where are you at? Where are you hiding? There you are. Neutral, so +2. So don't really have a play on it, unfortunately. But yeah, I mean, I would think it would just keep going back up. I agree. Because it's at some point, it's got to, at some point, this supply zone up here, because we got a daily, but we also have a couple 4 hours inside of that daily, it's going to act as a magnet. So at some point, I would suspect it to go up there. I mean, it's going to chase one of these. It's going to chase one of these zones, overhead supply or the underneath demand. You do have a double bottom down here, so I could definitely see the banks exploring and taking out this liquidity pocket that's just chilling right here. There's going to be some sell orders there since these buyers right here stepped in and pushed price up. These buyers here stepped in and pushed price up, and they put their stop losses below. So guarantee there's a pretty healthy dose of shorts, stop losses, which is obviously sell orders. And if I'm a big bank, I need those sell orders to fuel my buy orders because I have a much larger account size than most. So maybe we get some move where we come up and test this area, or I mean, obviously, or the other one. And then come down, take this liquidity, then take the unfilled orders from the demand zone confluence itself, go up. That's a potential play. But if we get back up to this area first, because this example was, testing this area. But yeah, if we get up to this area, okay, if price gets pushed up there, I can very easily see the bottom falling out of it. I don't want to say the intervention drop, but I don't know. Just try to think ahead. Just trying to think like a bank. But we'll see. We shall see on that. What other yen pairs are in the top setups? Let's get rid of our neutrals here. Yeah, currently we don't have a single yen pair on here. Again, Aussie yen is the biggest, the biggest difference of the biggest, the strongest and weakest currency at the moment. But Aussie yen is only giving us a +4. So this is, again, the technicals, and then a couple of the red boxes over in the fundamental side is keeping it from being a bullish setup. So let's go see what happens on Aussie yen. If we get our technicals, obviously the seasonality is going to remain the same all month, but what about the trend? Basically, all we need is the trend to kind of roll around, break some higher highs or something. If it does that, we've got a bullish setup on our hands. Let's go here. So this is our daily. What's up, Algo? How you doing? Okay, if we're looking at Aussie yen, well, what's going to turn this into a bullish setup? Well, if all things remain equal, meaning the fundamentals and the current COT report numbers and retail sentiment numbers, I mean, obviously the easy answer is break this high up here and then get a retracement, but that's a long ways away. So let's see if we've got anything on a 4 hour. Okay, obviously on the 4 hour, let's see here. So we broke these areas. We broke these structures. We just didn't have a very convincing close. We had a close above this supply here, which was a 2-hour supply. So I like that, honestly. I really kind of like that. I know it's not giving us a technical, green light on the trend, because the trend basically, if I understand the edge finder correctly, I do believe it follows a couple moving averages, a couple moving average crossovers, to the best of my recollection. I don't remember the name or the numbers. I want to say it's something like moving average 6, moving average 14, or something like that. Don't quote me on that, but that's basically why it's given us a -1 on our trend, because it's failing to. There's no crossover yet. I don't remember which number it is. But as far as I'm concerned, I got to be honest with you on Aussie yen. I feel like because we broke this structure and closed, that all I need now is just a retracement to a demand zone, because we clearly broke through the supply, right? I might be interested in hopping in this trade if we come down to this demand zone right here. Because another thing I see is this bottom here. So bottom, double bottom, triple bottom, if you're looking at it on a smaller time frame, right? There's definitely going to be some liquidity down here. Somewhere in this general, here, let's do this. Okay. Liquidity down here. These buyers here, these buyers here, these buyers here. They've got their stop losses down here somewhere. So I could see, did we touch that supply area yet? Yeah, not really, because we've obviously currently got another bottom. It did go a little bit lower than these 2 wicks here, but it obviously has not went lower than this wick yet. Talking about this new low point. So perhaps what I could see happening on this is price bouncing now into this supply, catching a bunch of sells here, to where now we come down and chew through the liquidity into the demand for a possible buy. Just kind of ping-ponging on some of these lower ones. Now, if this were a bearish asset to me, I would not be selling. I would not be putting money on a sell out of this demand, because it's too low on the curve. But I'm just saying, supply and demand zones, guys, they work sometimes when I don't think they're going to work, right? Even if they are not on the right spot on the curve, meaning swing high to swing low. Most recent swing high, swing low. Algo, what are you trading today, boss? Let me know. But yeah, if we come down here, here's the key though. For us to come down here to this demand zone, my preference is to see my RSI dip below the 20 level down here at the bottom. And just as a refresher, guys, I use 80-20 as my parameters on RSI. I want to get those really extreme readings. And then also on the RSI, it comes default as a 14 period for the RSI length. I change it to 6. Okay. I'm testing this out because I was at a 4-day class last week. And the parameters they use is 6 for the length of it. Okay. So it just basically kind of catches more extreme readings. Well, those extreme readings look really good when price is simultaneously bouncing into a strong looking demand zone or supply zone. Okay. If it's over 80 in supply. So that's the key. So I'm going to probably get into a trade down here, because number one, I've got the 50 period, which is this light blue. The 50 period moving average, the exponential moving average, is above the 200, which is that dark blue. Okay. So that's one crossover that I like. And then all I want to see at this point is a return to the 200. Well, the 200 just so happens, where's it at? It's sitting just above the demand zone. So it's got to pierce the moving average. So once it pierces it, it's got to come just a little bit lower into the demand zone, so I can hop on the bank train. Okay, the banks, they're going to need liquidity. They're going to need unfilled orders. We've got a nice strong demand zone over here because we had a yellow volume spread analysis bar on the leg out. It left us a nice gap from the top of this wick to the bottom of this real body over here. That's very strong evidence that demand heavily exceeded supply when it left an inefficiency in the market. Remember, any demand or supply zones I trade, they have to have an inefficiency just above or below it. So there's my gap right there. Right? If this candle would have came back down and, intersected with the wick, then that's an efficient market. That's an efficient market. But I like inefficiencies. So give me that strong gap and then give me a nice strong zone just beyond it. Ladies and gents, that presents with some of the best entries. Some of the best entries. So many people trade supply and demand, and oftentimes I see where they criticize it. Oh, it doesn't work. It doesn't work. Well, ladies and gentlemen, it's because they're not trading it right. This is something I've personally studied for 12 years now. I've studied every little piece of supply and demand zones and what makes them tick and what doesn't make them tick. And there's just a series of things you got to go through to qualify, because not every zone is going to work. Okay, if it's a zone that's in the retail chop zone, if it's out in the middle, meaning if you have a swing high and a swing low and that zone is out in the middle, those aren't the greatest zones to trade because that's the retail chop zone. We don't diddle in the middle. When you diddle in the middle, you get chopped to pieces. So that's part of the reason that I'm glad that I've incorporated the RSI 6 into my life now, because it's acting as a filter to filter out some of those zones that maybe are not as extreme as I thought just by looking at the zone itself. So supply and demand is powerful. That's how price moves. It moves from higher time frame supply and demand zones. Okay, it's just, again, it acts as a ping pong. I think that's the perfect representation of it. Bounce from demand to supply, bounce from that supply to demand. Okay, and it's all controlled by the banks. The banks are playing us like a fiddle. So do we want to try to reinvent the wheel? Do we want to create our own thing, or do we just want to follow what the banks are doing? Right? If you can't beat them, join them. There's your quote of the day right there. If you can't beat them, join them. We cannot compete with a bank in the interbank system. Can't do it. Okay? Because we don't have $100 million, pockets, $1 billion pockets like some of them do. Right? We're just a little speck of sand on their beach. Okay, they're the beach. We're one speck of sand. Okay, just to give a representation. So if you can't beat them, join them. Okay, pride and ego should go out the door when it comes to trading. It's their game. We're just in it. All right, Algo, what we got over here? I didn't trade today, but I longed gold yesterday night. Look, I didn't trade anything yesterday either. I sat here all day, and I kind of took like a kind of relaxed day. I still watched the charts all day, but just nothing set up. Now, one or two things did set up. It just barely missed my expectations, meaning I had one specifically. I can't remember the asset, but it missed my moving average. It missed my 200 moving average just by like 5 or 10 pips. And that's all I was doing, was waiting on it to touch it, because everything else was in line. Okay, I was beyond the RSI 20. I had bounced into demand, uptrend, gap showing demand heavily exceeded supply. Everything else, okay, 50 over 200, 8 over 21 on the highest time frame to verify trend. Everything was good, but it was about like this current setup right now. Okay, except that we had already bounced into the demand zone. So I just missed it by like 5. I can't remember which one it was, but it turned out to be a hell of a setup, because it very quickly went to my would-be take profit. And that's going to happen a lot of times. Sometimes when you've got strict rules, oftentimes you'll miss setups. But I'm fine with that. If I miss a setup with the understanding that, I've got a good set of rules, I know that I can win this thing more often than I lose. I'm fine with that. And discipline is the hardest, I think, the hardest thing to teach in trading. Okay. Even though I was just crushed sitting on my hands, like, damn it, I really wanted to get in that trade. But if I would have gotten into that trade, whichever one it was, I would have broken my rules because price had not yet dropped to the 200. But demand zones and supply zones, I'm telling you, if you took away all the indicators, all the oscillators, volume, everything, if I could have one item to trade with, all it would be is it would just be the naked chart, guys. You don't need all this crap. Now, it's nice to have, volume and RSI to see where your momentum's at, things like that. But my trades, at the end of the day, the number one reason for me to get in a trade is the supplier demand zone bounce. That's it. Right. So even though my supply and demand system knew it was a good entry, I still avoided it because I was waiting on the last piece to my puzzle and it didn't fall. So anyway, so let's go look at gold since you brought that up, because I was just looking at it a little bit earlier. So daily time frame here, I got my 8 over my 21. So that is a bullish signal. If I go to my 4-hour, we've got higher highs and lows. But like I mentioned yesterday, right here where we broke this structure, it just didn't close and it just did not look that great. It didn't look very convincing of a break of structure, in my opinion. That's just the way I see it. Not saying I'm right or wrong, but for me personally, when I get a break of structure, I don't want it to just wick across like it did. See, look, if I move this line, right, if I put a line at the top here, okay, we just wicked across. Here, let me do this. I got too much crap on my screen. Yeah. All right. So here we go. We whipped across right here, but we just didn't get a close. I like to see when we get breaks of structures, I want to see it close with a healthy push beyond it. We just didn't get that. So I kind of look at gold as just a little bit too sideways for me. And if you're looking at that swing high where the wicks went across, and if we look at our new set of highs, highs and lows, well, that's a high. This is a lower high, and then right here's a low, and this right here is a lower low. So if you look at it from that point of view, it's a little bit of a downtrend. But for me, that all changes if one of two things happens. Number one, if it drops into the 4-hour demand zone down here, where it looks like we got some confluence. Okay, if we drop down into there, I'll take a stab at it, but I will not be interested in putting in a full healthy position, because think about it. On a 4-hour time frame, that would be a series of lower lows and highs. Right? If we just drop in right now, let's look at that a little deeper. Right? So from where we're at, if we come down, then what have we got? We've got a series of lower highs and lows, right? That's lower highs. This is lower lows, right? So that's now a pretty high time frame. I mean, obviously it's not a daily, obviously it's not a weekly, but a 4-hour is still a pretty high time frame. So that's a set of lower highs and lows. That's by definition a downtrend. Okay, when you're looking at it on that time frame. But I'm okay with taking a small trade on it because we've got a pretty decent demand zone down here. Now, the volume wasn't the greatest, but we did have quite the push away until right about here where it started going sideways. So it's just barely enough for me to want to put in a small position once we get priced down here. And again, assuming I've got RSI that goes below 20, I've got my moving average 50 still being above the 200. Okay. That stuff has to still be the same. But I could see putting a small position. Now, that's not my favorite setup. Like I mentioned yesterday, my favorite setup is, hey, let's break this new now double top. If you look at it from that point of view, let's break it, close healthy, and then get a retracement down to a new demand zone for a buy. That's my favorite setup. Okay. Now, I always say I like discounts. Give me a discount. And this would obviously be the biggest discount. But with this discount, again, it's just falling in line with a new series of lower lows and highs. So I don't know that I'm that excited about it. It's one of the few times I would prefer the upwards breakout. Okay? Just because of the way price has acted since we wicked above this this structure point. So that's just the way I see it. But I'll be prepared to take a trade either way. Okay. Down here is a partial position. Up here, actually, both of them would just be a partial position because I don't typically like doing these, break retest trades like this on a higher time frame. But we'll see. We'll see. Depends on what side of the bed I wake up on on that day. And then, and then silver, everything's kind of the opposite, guys. We're getting a series of lower lows and highs down here. So no signal on silver, but with gold. Now, if you kind of zoom in a little deeper, okay, there's our 4 hour. Let's go in a little smaller here. I just wanted to see what these demand zones look like on a smaller time frame. Let's see here. What looks good here? We broke this structure here. Let's see our structure points. So there's a structure. There's a structure there. There's a structure there. There's a structure there. So these are structures broken. So can we find any decent impulse legs out of the legs that broke those structures? Well, if we start all the way at the bottom, price came up, failed to break the structure. In fact, what happened? Bounced into this supply zone right here. Okay. That acted as a supply zone at one point. Now, that's not a supply zone I was too worried about. And as you see, we got a reaction from that supply zone because it pushed down. But this is one of those examples where we had a strong move behind it, followed by a reaction, but then a continuation. Okay, so that zone is now old news. Now we got a new swing low, and that looks like a pretty decent looking demand zone to me. Okay, wrapping a rectangle around this candle here. What happened with this demand zone? Did this demand zone, was this the origin of a leg that broke some structures? Well, yes, because we broke this leg here. Yes, because we broke our structure, I should say. Yes, also because we broke this structure. And yes, also because we broke this structure. Now, on this structure, we didn't get a close, but we got a close above 2 structure points. So because we got a close above 2 structure points, that tells me that this is now the origin of a brand new impulse leg. If I'm only looking at these 5 green candles right here, that's an impulse leg because it broke and closed above structure points. Not 1, but 2. And it even pierced a 3rd, right? So when that happens, I have to pay some type of attention to this overall impulse leg, right? So if I'm looking at that impulse leg, obviously this being the origin of the strong move up, I at least want to see what happens if and when we return to this demand zone. So I'm going to go ahead and put me an alert there, and I'm just going to put it out through, I'll just put it out through the end of next week, since we do only have a day and a half of trading activity left for the week. So I'm just going to put that out a week. Excuse me. Okay, so I want to pay attention. Now, I'm not going to worry about anything about this area now because I've got an alert set. What about this? What about this most recent swing low? Okay, this most recent swing low broke a structure, and then it broke and closed above that structure barely. It just barely closed, I think. Yeah. It broke and closed above that first structure, or I should say the last structure I drew up. So is that worth taking a look at? We're down on a 1 hour time frame. So remember, we're starting to get down into the noise, the retail noise, right? So it's a little sketchy. Now I'm going to go ahead and get rid of some of these lines. Okay, we've broken all these structures. What do you think? Is this a possibility of a trade in this area? Well, number one, right off the bat, yes, we did break a structure. Yes, we did have several consecutive green candles, but the volume was terrible. That's number one. Number two is the fact that we are very high on the curve. We're in the upper third. So if anything, we should be selling up here, but I can't sell on a, I'm not interested in selling an asset. Number one, that's technically up in this area, but number two, obviously that it's on the edge finder is bullish. Time to pull off the old jacket piece. I think I'm finally warm after my shower. So that's out of the question for me. Okay. Now down here, it's right at the cutoff. Okay. You can see we're straddling the bottom third with the middle third. So that's close enough for me personally. So that's why I've got my alert set there. Okay. That's what I'm looking at. And just for kicks, did that come to the 38.2? Okay, so there you go. So if you're looking at the 38.2 level, it's actually still below that. So anything you buy up here would just, to me, be too expensive. I mean, that's, the 38.2 is a line that a lot of people do use as a continuation. I personally don't use it very often unless it's on a higher time frame. But on a smaller time frame, like a 1 hour, anything that's under 4 hour, I have no interest in the 38.2 level because I need a full retracement back at least to the bottom third. Okay. At least to the bottom third. And obviously the 61.8, it's kind of sketchy in that area because it's inside of the chop zone. But that's why I'm okay with this one because obviously a 61.8, obviously the golden zone, obviously that's a pretty strong level, in the retail world. And it just so happens that 61.8 is right at the proximal line of the demand zone I drew up. So, that's part of the reason I'm okay with taking a stab at this area, even though it's partially in the middle third. At least it's at the lower part of the chop zone, right? That's the good news. And we got the 61.8. So I really like this. If I'm looking at a 1 hour time frame, I really kind of like this as a possible place to trade. Okay, the volume, although it was low in that consolidation area, it started to grow, obviously, as we pushed up, as we had these nice bullish candles. Remember, that broke one structure, broke two structures, and closed, and then broke a third that just didn't close. So that's a pretty decent looking area. So what I'm looking for, and I got a lot of lines up here, so let me just get rid of some stuff. Okay. Because remember that first setup, those first setups were on the higher time frames, but this one being on the lower time frame. Come down here, and ideally I would look for a 1 hour candle to close, showing that the momentum is turning around. And then once we get that candle, break the structure of that 1 hour candle to the upside, and that's where the entry comes in. Because this is, again, part of the set of rules I learned from my class. Now, this is new to me, just waiting on that 1 hour close. I mean, my favorite is still break a structure up. So finding that new impulse leg up. And then waiting for the, retracement to a newly created demand. So that's still my favorite. So I'm just testing this out. Okay. Giving this the time of day. And so far it's worked good. I got to say, I've already taken a few trades on this in the last few days, and the 1 hour close, getting that momentum closed, that momentum shift to the opposite side in the direction you want it to go has actually worked pretty well. So I may just stick with it. Hey, I've been in the game for 12 years, but I'm not ashamed to say I might be changing something. I still prefer this, but I think I've got two options now. I think that's the way I'm looking at it, right? Because the confirmation entry was my bread and butter, but now I've got two ways of doing it. Okay, just depends on the context, depends on the setup, depends on the time frame. Okay? That's basically how I'm going to look at it. 721. What have we got up here today? Let me get rid of everything that we don't care about for the day. Okay, unemployment claims. So we are 8-9 minutes away from that. So we'll take a look at that here in a second. Take a look at financial juice just to see if we have any top line events or geopolitical events happening. Okay, there's euro dollar forecast. Sellers taking over after hawkish. Oh, yeah. So, yeah, when it came to the hawkish, or when it came to the Fed minutes yesterday, it was quite hawkish, guys. I have some notes over here off screen. I'm going to try to find. I don't know. Did I? Let me see. Did I just want to see if I saved those notes. Man, I must have deleted them. I must have deleted those notes. Damn it. Yeah, I was clearing up some old files earlier, and so gold, silver, Bitcoin is range bound. Yeah, we already knew that. Yeah, nothing of note there. Asian session was relatively calm with thin liquidity. You did have a couple dissenters. I do remember that part. A couple of so Governor Waller and Governor Miron, which is the Trump appointed governor, they were both pushing hardcore for the next meeting to be a 25 basis point cut. But other than that, everybody else was kind of in the middle. Keep it unchanged. I want to see what the CME says. Because I think yesterday we were chilling around 90% that we were going to remain the same, keep the rates the same. And yeah, actually we're a little higher this time. Yeah. So see yesterday, and this is a very dynamic thing right here. This is just nothing more than the percentage chance of, the interest rate, the next meeting interest rate decision is going to land on that number. So currently that's where we're at, 375. But yesterday it was only a 90% chance that we were going to remain the same, remain unchanged. Today it's higher. It's 3 points higher. Now that's not earth-shattering news or anything, but when it came to the Fed speak yesterday, it was quite hawkish. They did introduce language yesterday saying that they were a little more concerned with the inflation. They thought the inflation was spiking. Let's go look at inflation over here on the Edge Finder. Economic data, inflation, consumer price index. Yeah, because that's partly why their target's 2%. They're trying to get to 2%, but they just haven't been able to do it, ladies and gents. It's been very, very sticky. Okay, we got down to 3% back here after all the end of all the COVID nonsense when it comes to the economics of the country. Got to 3%, but from that point, we haven't made any substantial, decreases. I mean, we did get down to 2.5 over here, 2.4. We did get down to 2.3 down here. And then currently we're still a little higher than that. We're basically right. We're basically the same in the same spot as we were 1 year ago, okay? February of 2025, 2.4. So it's just going straight sideways, but they can't quite get price down, or I should say, they can't quite get the inflation rate down to 2%. That's the goal. You want to have some inflation, as silly as that sounds. It sounds counterintuitive, but you don't want to have zero inflation. Okay? You don't. You got to have at least a small amount. So obviously, all things being equal, 2% is the target. It's sticky. They haven't been able to get there. They got within 0.3% back in May of last year, but that's the closest they've been. It's just been straight sideways. Straight sideways, straight butter. Straight butter. So let's take a look at some top setups. What's our number one asset? Looks to me like it's pound Aussie to the short side. So let's go have a look. Pound Aussie short. See what we got. Daily time frame. I've got obviously lower lows and highs. I've got my 8 EMA below my 21 EMA for that extra confirmation. Go to a 4-hour. Do I have any close 4-hour supply zones? Not really. You know what? I would like to be able to draw this up right here as a 4-hour supply zone, but I can't. It's too premature. It's too premature because so far, this being the origin of a strong move down, so far it has not broken a structure. It's got to break this swing low down here for me to be excited about it. Okay. If we can get this continuation down at some point, break and close below this swing low, then I would be happy for a return to the supply zone for a possible short. So break, close, and then get our bounce for a possible short at that point. That's more of a longer term setup. Okay, but that's my rules, my personal rules. I like to see zones that have the power to break structures. That's the only way. In fact, I'm not even going to draw it up as a supply zone yet because it hasn't met my definition, my rules. Now that's for the 4-hour time frame. Right? That's 4-hour. What impulse leg am I currently in? Well, the current impulse leg, let me refresh this. Yeah, there's just nothing on a higher time frame. So we're going to have to dig into some smaller time frames. Okay. So on a smaller time frame, looks like I drew up a supply here. What time frame was that? 15-minute? Well, let me do one thing. So that's a 15-minute supply, but I just wanted to see. Okay, so for a 1 hour, if I were to wait for a retracement to the 200, that's still quite a ways away. So about the lowest I'm interested in going is a 15-minute time frame so that I can get the following things to happen. Number one, price return to my supply zone. That's number one. Number two is my RSI piercing the 80 level, the overbought area. Okay. When price hits my supply zone, I need the following things to happen. I need RSI to go above 80. I need the 50 EMA, which is the light blue. I need it to remain under the 200 EMA. But then also I need price to pierce the 200 itself. So far, all this is shaping up pretty good. I mean, if I draw this up, if we get a retracement to the supply where I would want to sell, then by the time price gets up there, if I just kind of fast forward the moving averages, we'd be looking at something like that for the blue. And then we'd be looking at something like, this will curve a little quicker up, right? For the light blue, something like that. It's a 50. It's a quarter of the length. So this will move a little faster, right? So all things being equal, if price were to come back up, then I would pierce the 200 EMA, which is my ultimate signal, but only after and only if we pierce a supply zone. If we do that on a 15-minute time frame, then I would wait for a 15-minute bearish candle, just like that. And once we get that 15-minute bearish candle, I'm looking for a break of that candle down, and this is my entry, ladies and gents. That's my entry right there on the next candle as we break below the low of that candle. Now, how do I factor this? Number one, am I getting a 2-to-1? That's the goal. That's always my goal. So if I enter my trade right here, if I pull out my my ruler, okay. Number one, how far is it to the swing low or demand zone? Okay, if there's a demand zone that forms in this area, I have to take that into consideration. But if I don't have any decent looking demand zones, then yeah, I would just go to the most recent swing low, which obviously you guys see this is a double bottom. That's pretty exciting because that means there's going to be some liquidity on the other side of that down here. I think it's still premature to call this a triple bottom because we haven't even come down to these lows yet. We're getting close, but let's just for argument's sake say that we'll put at the swing lows. Okay, that's 64 pips from this entry. So if I take 64 and again, my goal is to get a 2-to-1. So what's 64 divided by 2? Well, that comes out to be 32. So from my entry, I have to measure backwards for my stop loss. Does 32 pips seem feasible? Okay, and there's 32 pips right there. I think it's feasible because up here at that 32 pip mark, well, now you're starting to run into some more supply area. And I bet if I drop down to a 30, yeah, look at this. Now we got a 30-minute supply zone right here to worry about. Right? See that indecision candle? That's as indecision as it gets. Followed by a strong move out, a little bit of a gap. It's not the strongest, so I don't know that I'm like 100% worried about it. But what I would do is just put my stop loss just barely below the supply. So something like that right there, ladies and gents. So again, it depends on how this 1 hour bearish candle closes. Is it just a small one? Is it a gigantic one? If it's if it's a super big candle, then obviously, I'm not interested at the moment. So that's my trade setup. Assuming we sell here rather, sorry, because we got to get that momentum candle telling us that it's trying to break to the opposite side. And then we target the lows. So let's take a look because we did have our employment numbers come out. Looks pretty good to me, ladies and gents. Okay, the previous number was 229,000. They forecasted a decline, which is good, but they only forecasted a 6,000 decline on jobless claims. But instead, that was a pretty healthy. That's a pretty healthy drop right there. That's 23,000 less people for the previous number, and 17,000 less than the forecast. So that's 17,000 more people working than they expected. Okay, so that's good. That's good for the economy. Obviously, less people going on unemployment means that amount of people are working. When those people are working, they're making money. When they're making money, they're contributing to the GDP. Okay, they're spending money. They're buying things, gas for the car, food, clothing. Okay, so that's pretty good. So let's go look at the dollar specifically for the unemployment claims up here on the economic heat map. Okay, here's our jobless claims down here from last week. So this is cool, guys. This is good for the dollar because last week's reading was bearish. Okay. Last week's reading was bearish because we had an increase in unemployment claims, but now we just had a decline. So this is going to be a nice bullish box whenever it gets updated in the Edge Finder. So our percentage is going to change from the current 58% up to like 66%, I think, somewhere in that area. 65, 66%, something like that. So that's good for the dollar. So let's go look at the dollar, the Dixie. I like it. 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 5-minute chart. Okay. So not really seeing a big change yet. There's your 1-minute candle. There's your report release right there. So that's a decent candle, but not really a whole lot of follow through. Let's go look at dollar yen. Actually, you know what? I have high impact and then high impact 2. So kind of like Nick has his chart up of whenever the report releases happen. And I've only got it to where I can do 4 charts instead of the 8 like he has it set up. So I just actually open up 2 different windows like this. That's how I do it. So looking at the S&P, the NASI. Okay, obviously not a gigantic change just yet, but we do have obviously a spike up on the indices, the US indices. So this is a 5-minute chart. S&P, the NASDAQ, and the Dow down here. And then Bitcoin. Okay, the risk on assets, right? Risk on, and they're both going up. So that is those. And if we flip to the other items, okay, we got gold here, we got silver here, and that's a 1-hour chart. So let's go back to a 5-minute. So 5-minute, okay, gold's getting a little spike up. Actually, about everything's getting a spike up, except for the Dixie. It's still kind of just going sideways. Crude oil. Of course, crude oil had a pretty big move yesterday, like a really big move. Go look at the daily chart real quick. Hey, there was your candle yesterday, and it's just continuing at the intraday switchover. So oil's up, but going back to the current time. Yeah, it looks like everything's reacting pretty healthy at the moment. That's early. Okay, Bitcoin getting another drop, or a drop. Going to a 1-minute chart, and you can see it a little easier. So sudden decline. But yeah, that's a good number, guys. So it wouldn't shock me at all to see a nice incline on some of these assets. Looking pretty good. Ah, there you go. There's just some spikes over here. Spike down on gold. Remember, gold's giving us a bullish signal. So with this release, now that's the thing to remember. With this release for the dollar, that's a point extra for the dollar, which also means it's going to be a point taken away from gold. So this 6, I think, will go back down to a 5. So it'll still remain bullish because it is 5 or higher, but not as bullish. Okay, not as bullish. So let's go look at gold again. Yeah. So see, we're still quite a ways away from that hourly demand zone I was looking at, and the key and again, you know, if I get excited, if I were to want to buy this demand zone, okay, if I wanted to buy this demand zone, I've got to see the 50 move above the 200. So it may not have enough momentum to get there if price were to just come down in, because by the time price came down in here, well, the 50 is actually going to move quicker than the 200. So the 50 is going to remain underneath it. So I don't know that I'm going to like that. I don't know. Probably not. I mean, again, my preference on this gold chart, if I were to look to buy on the smaller time frame, my preference for price action is for it to move up a little bit higher, before coming down to test that demand zone because of my moving averages. Now, the moving averages are not the end all be all. I would also take into consideration what it looks like on a 2 hour, what it looks like on a 30-minute. It's just that the 1 hour and the 15-minute, when it comes to execution time frames, are the ones through the data that work the best with the with this trading strategy, guys, the filtering strategy. Again, that I learned, that I got familiar with last week. So, yeah, I just don't know. I don't really like it. But anyway, guys, I'm going to be off of here in a few minutes. I do have my 30-minute session with Trader Nick again. Okay. So as always, you guys can go to a1trading.com if you have not yet familiarized yourself with the A1 Trading stream, the Trader Nick stream. But one thing is, this week, for the rest of the week, they are doing a 40% promo on the Edge Finder, guys. It's 45% if you holler at him on stream or during the stream, and he will post a link in the chat to give you guys something to click on to send a message to the team, and then they'll hook up with you and help you out. But yeah, like you see right there on screen, guys, it's normally $1,400 for the tool. Okay, normally $1,400, but right now he's got a promo where you can get $560 off. And I think that might be the 40%. So again, if you chat with them on stream, you get that additional 5% off. So quite the savings. And this is a one-time payment. Okay, you don't have to pay this monthly. This is just a one-time payment. Remember, if the people that utilize Bloomberg Terminal, they're paying around $2,000, $2,200 or something like that per month. Okay, there you go. There's your discount. So they're paying that per month. For here, you're paying a fraction of that one time, and that's it. And the cool thing is, with all of the upgrades and updates that he does constantly on this thing, those are free upgrades and updates for you as well. So anything he adds to the Edge Finder, any of these awesome tools, you'll never have to pay additional upgrade fee. Okay, so just keep that in mind. You can't beat that. You absolutely cannot beat that. But he's live now. That's why I'm going to hop off so I can watch the early part of it and, kind of get ready for my segment, which, again, my segment comes up at – what time was it again? Live stream. 9:30, guys. So I'll be on in about an hour, 45 minutes from now. So definitely come check me out. But again, I'm going to go ahead and hop off. I got a couple things to do before that. So with that, ladies and gents, have a wonderful day. Flip on over there to Trader Nick. If you don't have anything going on, if you're looking for something to watch while you're trading. Okay, this guy's great. He's one of the good ones. Okay, he's one of the very few good ones that you'll find on here. Okay? There's a lot of traders putting out content, a lot of them. Okay. But there's also a lot of deception and deceit trying to make a buck off of you. Signals and this and that. So, yeah, highly, guys, encourage, go check him out. So with that, love you guys. Talk to you next time.